All right, everybody, I'd like to introduce our next keynote presentation here at the Planet MicroCap Showcase Vancouver. We're very pleased to have here Steve Kreit from Kreit Chiu. Steve, take it away.
Great. Thank you, Bobby. Okay. Hi, everybody. My name is Steve Kreit. I'm the managing partner of Kreit Chiu. First, I guess, let me tell you a little bit about our firm, because not everybody has heard of it. So we launched a little over 2 years ago, May 1st, 21. At the time, there were 4 of us, 3 people and 1 manager. And I was the only audit partner at that time, the only practitioner. Fast forward 2 years and 3 months, and we're up to 35 people worldwide. We have 4 partners currently. We're about to have a 5th partner. John Della Rosa, who's here, is making partner January 1st. So we continue to grow. We are a firm that specializes in audit and more than that, PCAOB audits. Our clients are companies that are public, companies that are going public, going through the IPO process. And essentially 95% of our revenue comes from this audit work. About half our clients are US based, and the other half of our clients are international. They're international companies that are looking to go public and access the capital markets here in the US. So we have clients in China and Singapore and Korea and Malaysia and Indonesia, not to mention all over the US. We've recently been PCAOB inspected. So we went through that fun back in April. Actually, right before I was in Vegas. The week before that, we were actually doing going through the inspection. And I'm going to spend some time talking about the PCAOB in just a couple of minutes. Right now, we have grown. We have 20 public companies that are currently filing. We have another 20 or so that are going through the process. And in these 2 years, we've done 3 IPOs that have actually closed and raised money. The most recent being Inspired Veterinary, which went public just last week. So today I want to talk a little bit about what issuers should be thinking about when dealing with accounting firms and some of the things that accounting firms are going through and how that affects those issuers. So I'm going to spend some time talking about the PCAOB because you really can't talk about any U.S. audit firm without talking about the PCAOB. The PCAOB is what I call kind of a rougher version of CPAP. They have a lot of teeth, the PCAOB. And one thing about any kind of government or any kind of regulators is that the amount of regulating they do varies based on the political winds. Neil mentioned earlier about some of the differences when Obama was president versus when Trump was president versus now when Biden is president. And that's clearly seen at the PCAOB. They had new leadership. Erica Williams joined in January of 22. Mark Adler, who joined as the acting director of enforcement and investigation, started in September of 22. And during 22, the regulators really started to dig in. There were 29 disciplinary actions during 22, which is about a 60% increase from 2021. And there were about over $10 million of penalties assessed in 22, and that's up 10 times from 2021. I wouldn't expect the numbers this year to be substantially different from last year. I mean, Markham was just fined, I think, $3 million, and that's 3 times what the fines were back in 2021. And they're not the only one. So I'm going to spend a few minutes just talking about some of the pressure that accounting firms are facing with the PCAOB. There we go. So just going from December 22 to now, I want to show you, I'll flip through this fast and then go back and talk a little bit more. But these are just pages and pages and pages of sanctions and fines and bars that have all happened just since December of 22. So just talking about them a little bit. So back in December, there was a group of firms that got in trouble for not making their Form 3 disclosures timely. Now, basically, a Form 3 disclosure is an basically an information filing with the PCAOB. And in the past, things like information filings, when firms did it wrong, we usually covered within the inspection and a comment and through the inspection report. But now, as recent as December 22, they were basically fining and censuring firms for not filing these timely. And yeah, so just to give you an example, so Malone Bailey they fired a client. I'm sorry, no, they were fired from a client, but the client didn't file their Form 8K to say that they fired their auditors. And because of that, Malone Bailey was required to tell the PCAOB that they were fired, even though there were other information out there that showed that. They didn't make that filing, so at the end of the day, they were fined $25,000 and censured. Moving to 2023, there are certainly some big names here that everybody recognizes, Friedman and Markham. But there are other firms, they're not just punishing the big boys. They're certainly focusing on smaller firms. So Barzilli and Company, for example, had a $50,000 penalty and censure. Most of what their issues were also documentation. So as an example, one of the things you're supposed to disclose to the audit committee is any non-audit services that the firm performs. So the firm had an engagement letter, I want to say back in 17 or 18, for an audit and tax work with a client. And then the next year, they had the same client and they had the same engagement letter and left out the tax work out of the engagement letter, even though they were doing the tax work. It just, I don't know the details and whether it was an oversight or whether it was intentional. But regardless, they left out the tax services. And essentially because of that, when the PCAOB came in and did their inspection, they learned that they determined that they didn't have pre-approval for those tax services, and because of that, they were censured and penalized. There was another issue with Barzilli that they got in trouble with, is that, and for those of you who know, there's a concept of critical audit matters that have to be disclosed in audit opinions. So Barzilli went through the whole process of determining that there was no CAMs in that audit, but didn't document or didn't include that in the audit opinion that there was no CAMs, and that was part of this same penalty and censure as well. Moving on to July, as recently as July 2023. Again, a whole bunch of firms here that have been censured and fined and have different penalties as well. Mancera SC is an EY firm, and they used other EY firms as part of their audit, but they didn't let the audit committee know that they used other EY firms as part of the audit. So again, they were censured and fined. What we're seeing is some consistency here, is that, in the past, these things are items that would come out in inspection reports, but the PCAOB is being more aggressive, and this aggression is putting more pressure on accounting firms. So let's talk a little bit more about some of the more onerous issues. So here, these are a bunch of firms that in August, as recently as August, have had their registration revoked for periods of time, significantly bigger fines. Ciro Adams is an example. Was a one-person firm, or is a one-person firm with, or one partner firm with maybe 3-4 people. We actually know the firm. They're down in Delaware, and they had some issues on their inspection. They didn't do enough work around revenue testing. They relied on inquiry alone in some situations. They didn't test the completeness of data, and the list goes on. But the PCAOB is continuing to be aggressive and continuing to eliminate firms, smaller firms that have these issues that they feel should not be in the practice. Last page, I promise. So some more recent PCAOB sanctions. The last one was one that was just in the news, I think, about a week ago. Warren Avarat. The issue there is that they're part of the BDO Alliance. And the firm of BDO did some valuation work. Warren Averett LLC, which is not part of BDO, they're only part of the affiliation, so they get to market themselves as being part of that affiliation. Audited that company, that BDO did the valuation work. They audited BDO's valuation work, and the PCAOB determined they were not independent because of that. Before I go to that. So these are pressures that the PCAOB keeps putting on firms. There are other firms and other practitioners who have been barred from practicing, and that puts a lot of pressure on the industry, a lot of pressure on firms, and certainly a lot of pressure on issuers. Some of the trends that people should understand about what's going on in the U.S. So if you look at accounting grads, people who are graduating with an accounting degree and sitting for the CPA exam, these are the years with the latest data. But the nice, 10% decrease year over year of accounting grads. There's some statistics out there that says 75% of current accountants will retire in the next 15 years. And there's not the students that are coming through the pipeline that will replenish that. Undergraduate enrollment declined. In 2018, the CPA exam candidates hit a 10-year low, and that number has not gone up since 2018. And then, of course, COVID and the Great Resignation. There's numbers out there that say 300,000 or so. I think Neil used that same number earlier. 300,000 accountants and auditors left the profession during 21 and 22. That's 17% of accountants. So what does this mean to issuers? What does this mean for companies? Clearly, companies that are looking to go public in the U.S. are facing pressures of finding auditors. I was speaking with Joe Lukowski earlier, who said that he's having problems finding auditors for some of his clients. So what issuers are finding is that if they're not properly prepared, firms are not going to be able to get their work done in a timely manner. They're also finding that, like I said, they can't find auditors, or they run into issues where an issue comes up and the auditors take days, weeks, months to resolve some of these issues. Some of that some of that honestly is because they don't have the resources to really dive in and tackle it and finishing this up. Finishing up the audits and getting the registration statements filed. So that's a lot of pressure on accounting firms, and that pressure then trickles down to the issuers. Because if the issuers can't find auditors and the issuers are getting delayed and pushed back, that's just, adds delay into the IPO process, adds delay in companies getting the capital that they need to actually do their business. So that's really, something that's really continuing to gonna get harder and harder. There are firms that not only through some of the PCAOB items I spoke about before, but there are firms out there that are just moving away from PCAOB audit work. It's expensive. The insurance is expensive. Clients don't want to pay the rates to cover those costs. It's very risky. You get your name in your paper. You get your name on the PCAOB website if you do something wrong. So more and more firms are moving out of that space. Even more so, firms are moving out of the international company space. So auditing companies overseas that are looking to come to the U.S. and be public, and that certainly affects issuers here in Canada. So there are things that issuers could do, and there are ways that issuers could deal with these problems with public accounting firms and work with them in order to make the process go better. Neil spoke earlier about Aventis and how they help when the company doesn't have the inside resources. Getting that help for the issuers is really important. Making sure that they're prepared, making sure that when there's a timeline, they're hitting the timeline, making sure that issues, any big accounting issues, any big transactions are addressed early in the process. Everybody loves to get the easy stuff done first and then wait till the end to tackle the hard stuff. All that does is create more pressure on everybody, the firms and the issuers. So are there any questions So the difference, I'm sorry, the question is what's the difference between a U.S. CPA and a Canadian CPA? And I think you asked what's IFRS. Okay, every CPA in every country has their own country standards that they have to go through. In the U.S., there's you have a certain amount of credit hours that have to be done in college and passing the CPA exam. Every country has their own set of requirements, and you go through that process within that country. But I would say that a CPA, or I'm not sure if it's a CPA or a CA in Canada, I'm not 100% sure. But if you're a CPA in Canada and you've been trained with PCAOB, to do PCAOB audits, it's just as good as being a U.S. CPA. There are some issues. As an example, we're a U.S. firm. We're not registered in Canada. So if a Canadian firm is public on a Canadian market, we couldn't be their auditors because we're not registered with CPAP. And the same goes the other way. M&P is a large Canadian accounting firm. They're not PCAOB registered, so they use partners in the U.S. and work with other PCAOB registered firms. So there's that you're not allowed to practice in front of the exchanges if they're not registered. IFRS is International Financial Reporting Standards. That's, generally companies that are going public in the U.S. could either follow IFRS or follow U.S. GAAP. They really do have that choice. But IFRS is followed in many other countries. And there is one set of standards that's IFRS, but then there's also some country-specific IFRS that's a little bit different. If you're going to go public in the U.S. and you're going to follow IFRS, it can't be the country-specific IFRS. It has to be the following the international rules under IFRS. So they need to have an in-country or an in-country registered accounting firm, even if it's a Canadian firm that's registered in the U.S. with the PCAOB works just as well. But it's when they raise money. Trading on an exchange doesn't necessarily require financial statements or being represented by an auditor locally. And I was in the presentation about from CBOE earlier, where they talked about the difference between raising money and what the rules are versus just trading on their platform or trading internationally. So it's really when you raise that money and you're going public or raising money on a U.S. exchange in the U.S., that's when you would need a U.S. or a PCAOB registered firm. So my message about my message with all of that. So the question was, what was my message with all those slides about the PCAOB, and why are companies, why are firms that have been barred or sanctioned or whatnot still practicing? So there's two different ways the PCAOB could go. So and I showed a couple of slides of sanctions and bars, and really that's the regulators warning the issuers and the public that there's a problem with the firm. So Shelley, yes, to answer your question, issuers should certainly do due diligence with any audit firm that they're going to engage. As far as still doing business, so if you're fined and censured, that's very different than a bar. That's very different from not being allowed to practice in front of the PCAOB. The firms that are like that can't practice in front of the PCAOB. Sometimes, in the case, Ciro Adams' firm that I mentioned earlier, he can't even be associated with a public accounting firm for a certain period of time. I think in his case it was 2 years, and then he could reapply to be able to work at a firm again. The message is twofold. The message is certainly do your due diligence, but the other half of that message is that there's just less firms and less people that are available, and because of that, the issuers have to be that much more prepared. You can't drag it out like you used to and say we'll get to it, because the auditors don't have the resource to pick it up in 3 weeks anymore. Is it imperative to have basically a CFO outsource firm or an IPO readiness firm involved? And I would say in the microcap space, the answer is yes. The answer is yes, because none of them have the resources to have the right people. Exactly. So one of our public company clients, Muscle Maker, they've really changed their business over the last year or two, and if you read their filings, you would see that. But early on, when their new CFO came in, they needed a little bit of help with a couple of issues. And Aventis we got Aventis involved, and they work with them, and that was great. Now all of a sudden, they bought a farm in Africa, and their revenue went from 10 million a year to hundreds of millions a year because they're trading grain and other things like that. And their resources, they have enough resources now, so they hired their own internal SEC person. And even with that internal SEC person, having Aventis on speed dial, that would be that wouldn't be a bad answer. That wouldn't be a bad answer. So that's a good question, Joe. So first of all, let me say that we're not the only accounting firm that could do things like that and move quickly and work with our clients. At the end of the day, I spent 14 years at Eisner Amper. I spent 7.5 years at Ernst & Young. These are firms that know how to work with their clients within the rules. They know what the independence rules are. They know where they could help and where they are not allowed to help. And firms like that and firms like ours, kind of follow that same mindset. We don't have a national office, so when questions come, it's very easy to pick up the phone and for the partners and the managers to talk and to resolve the issue quickly. I mean, that's really the key, Joe, is you have issues, you have to address the issues, tackle the issues, and solve them quickly. And I think, not having a national office, having a very tight-knit group, having a firm that only does audits. I mean, this is really all we do. So there's no tax or consulting or anything else that's distracting us. It's all about audits, all about public companies, and it's all about getting the gap right, and of course getting the audit right as well. So so the question is, what's the re-audit risk when a firm is barred? I'm sorry, Neil, what was the first? Right. So the lead time could take a while. It could take years sometimes. I mean, there are firms out there that have been going through some issues for a number of years, probably firms that we all know the names of, and they're still going round and round with that. And the PCAOB hasn't yet barred them. They've maybe barred certain partners from that firm. But, unfortunately, like everything with government, it's just really slow. So they might uncover an issue and it might take a couple of years for them to get to the point where they're actually barring someone. As far as your second question, which is interesting because I was actually thinking about that this morning, and I'm not 100% sure what I think the answer is, and I could certainly get back to you with what the right answer is, but what I think the answer is essentially those years have to be re-audited. So I'll use, I keep pounding on Ciro Adams, and I apologize to Ciro for that. But if he audited, if Kreit Chiu were to take over one of his clients for the 23 December audit, he could not issue a consent for the 2022 audit, nor do I think they could include his opinion. So I believe the answer is that they would have to be re-audited for that year. And that causes a lot of headaches, a lot of work, and a lot of money. Yes, sir. So yeah, the question was, is there an appeals process when you get sanctioned, when a firm gets sanctioned? And I don't know all the rules in and out of that. I do apologize for that. I do know there is an appeals process, but it is not like a court of law appeals process. I don't know. I know there's been a case in the news recently about some people suing, I believe it's the SEC, about how they resolve issues against companies, against issuers, and basically saying that the way they're doing it doesn't follow the Constitution. I would believe that there could be things like that against the PCAOB as well. I'm not an attorney, and so I really don't know if that would if that could happen or that would even be successful. I am being told to wrap it up. I'm sorry.
Be hanging out here
for today and tomorrow. Flying back the East Coast on Friday. Thanks, everybody. Thanks, Bob.